Do you dream of a life of luxury and financial freedom? Well, it's time to shatter the misconceptions about debt and embrace a powerful wealth-building tool, leveraging debt. Contrary to popular belief, not all debt is bad. In fact, strategic debt can be the key to unlocking a life of abundance and prosperity. By harnessing the power of leveraging debt, you can accelerate your wealth accumulation like never before. Imagine this. Rather than using your hard-earned savings to make big purchases, you strategically use other people's money. By taking on calculated debt, you can free up your capital to invest in income-producing assets. Using debt to invest in real estate, for example, can generate multiple streams of passive income. Rental properties can provide you with a consistent cash flow that builds your wealth exponentially over time. And the best part? The tenants pay off the debt for you. Wealthy investors use debt to leverage their investments. This means they use borrowed money to increase their potential return on investment. For example, an investor might use a small amount of their own money and borrow the rest to purchase a property. Real estate investments are often financed through mortgages. By only paying a fraction of the property's value upfront, the down payment, an investor can control a much larger asset. Over time, real estate generally appreciates in value. This means that the property's value can increase beyond the amount of debt incurred to purchase it. Real estate investments can offer tax advantages. Mortgage interest, property taxes, and other expenses related to property investment can often be deducted from taxable income. Rental properties can generate consistent cash flow. The income from tenants can cover the mortgage payments and other property expenses, with the surplus being profit. As the mortgage on a property is paid down, the investor's equity in the property increases. This growing equity is a form of wealth accumulation. By investing in different types of properties or in different geographic areas, investors can diversify their income streams, reducing risk. Once a property has appreciated or the mortgage has been paid down, investors can refinance to extract equity. This money can then be used to invest in more properties, creating a cycle of growth. When a property is sold for more than its purchase price, the investor realizes capital gains. This can be a significant source of income, although it's subject to capital gains tax. This is where tax strategies like 1031 exchange come into play, which we will discuss in an upcoming video. If you like our content so far, please like, subscribe, or submit your questions in the comments, and we will do our best to respond to each one. Now, let's discuss some examples of real estate investment strategies, purchasing properties and holding them for a long period, benefiting from rental income and appreciation. Another example is fix and flip, buying undervalued properties, renovating them, and selling them for a profit. Commercial real estate, investing in commercial properties like office buildings, retail spaces, or warehouses, which can offer higher rental incomes but may require more capital. Multifamily units, investing in apartment buildings or multifamily units, can generate multiple streams of rental income from a single investment. Real estate investment trusts, REITs. For those not wanting direct property management, investing in REITs offers exposure to real estate markets with liquidity and without the need for hands-on management. Some risks and considerations are market fluctuations. Real estate markets can be volatile. Property values and rental incomes can fluctuate based on economic conditions. Debt risks. Using debt increases financial risk. If property values decrease or rental income is insufficient, investors still owe the debt. Management overhead. Rental properties require active management, which can be time-consuming or require the expense of a property manager. Liquidity. Real estate is not a liquid asset. Selling a property can take time, which could be a disadvantage if funds are needed quickly. Now, using debt and leverage doesn't stop there. Leveraging debt can also be a powerful tool in business. By securing loans to expand your company, you can increase your revenue and take advantage of new opportunities. Debt can fuel growth and help you dominate your market. Businesses often take on debt to finance expansion projects. such as opening new locations, increasing production capacity, or developing new products. Debt can be used to purchase essential assets like machinery, technology, or real estate that are crucial for business growth and operational efficiency. Investing in research and development can be vital for staying competitive, especially in technology-driven industries. Debt can provide the necessary funds for such investments. Leveraging debt can enable a company to acquire or merge with other companies, potentially leading to rapid growth and market expansion. Short-term loans or lines of credit can boost working capital, allowing businesses to manage daily expenses more effectively and seize growth opportunities. Now let's discuss some advantages of using debt. Interest payments on business debt are generally tax-deductible, which can reduce the overall cost of the debt. Ownership retention. Unlike equity financing, where raising funds might involve issuing new shares and diluting ownership, debt does not require giving up equity stakes in the business. Leverage effect. If the return on the investment exceeds the cost of debt, leveraging can significantly boost the returns for equity holders. Of course, debt should be used responsibly and with careful planning. It's essential to understand your risk tolerance and have a solid plan in place. Educate yourself on different types of debt and find the right strategies that align with your financial goals. So if you're tired of dreaming and ready to take action toward financial freedom, start harnessing the power of leveraging debt. Embrace smart borrowing, invest wisely, and watch your wealth soar. Thanks for watching this video on the power of leveraging debt. If you found this information valuable, make sure to subscribe to our channel for more wealth-building tips and strategies. Get ready to unlock a world of wealth like never before.